Today, Ether surges after the completion of the Shanghai upgrade. Elon Musk takes his next steps in turning Twitter into the everything app, adding crypto trading. And Fred Thiel of Marathon Digital discusses renewed scrutiny on crypto's energy use just as Texas state lawmakers advance new restrictions on mining. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto markets getting a boost after the completion of Ethereum's Shanghai upgrade. As of noon Eastern, Bitcoin was back above $30,000, while Ether jumped to $2,000 for the first time since August. Dogecoin also rallying this morning, all because of Elon Musk. Once again, that token traded around 8 cents. Okay, let's talk about the top stories, and we'll start with the latest crypto-friendly move from Twitter and Elon Musk. Starting today, Twitter will let users access stocks, crypto, and other assets through a partnership with eToro. The company told CNBC exclusively that the feature will be rolled out through the Twitter app, and users can view expanded financial data on those assets. eToro said the sale will happen through a button that says View on eToro, which will take users to the investment platform to complete the transaction. The move does seem to fit into Elon Musk's vision of creating a super app out of Twitter, sort of like WeChat, where users can do nearly anything on it through a wide range of services. Next, let's talk about the other big story, the Shanghai upgrade. According to Ethereum developers, the latest upgrade to the platform has been finalized. It lets users withdraw staked ETH that had been locked on the platform, and according to Nansen, roughly 0.4% of staked ETH has been sold since the upgrade. Overall, the amount of ETH being staked on the platform is outpacing the amount being withdrawn and entering the marketplace, which is good news for the price of Ether. And finally, a bill by Texas state lawmakers to cut incentives for Bitcoin miners is moving forward. The Senate passed the measure, which would put a cap on the amount of Bitcoin miners could get paid to cut energy use during periods of high demand. The bill would also slash tax cuts for these projects. It's a surprising move for a state that prided itself on its friendliness toward crypto companies and crypto miners specifically, and now heads to the House for another vote. All right, let's talk more about sentiment around crypto mining for our main story. Crypto World's Mackenzie Segallo spoke to Fred Thiel, the CEO of Marathon Digital Holdings, about the state of the industry and to get his take on a fresh report from the New York Times that examined the sheer size of some of these mining facilities and just how much energy the industry is using.
You have new legislation from Texas that's seen as anti-mining, also new reporting from the New York Times, taking a closer look at this proof of work consensus mechanism. Walk me through the arguments being made and your response to that.
So I think, the New York Times has taken a position that energy is a zero-sum game. If somebody is using renewable energy, then a consumer has to then use fossil fuel energy, there's this fixed amount of energy available. And that's not the truth. When you look at the energy markets today, the U.S. actually has excess generating capacity. And the way energy markets work is, nuclear energy is at the bottom, then comes coal, then comes natural gas, and last of all comes solar and wind. So renewable energy is the first energy to be turned off by the grid when it doesn't need it, and the last to be turned on. So you need to create an economic incentive for renewable energy providers to build more renewable energy. The problem is the sun only shines from late morning to early afternoon, and the wind blows in the afternoon. And most energy in this country is consumed 4 p.m. to 9 p.m. Bitcoin miners have this unique ability to, when the grid needs the energy, shut off their operations and provide that energy to the grid. So it's not ever the case that a Bitcoin miner is taking energy that a consumer otherwise would use, because renewable energy is always going to be the first that's shut off. You can't turn up and down a nuclear power plant. You can't turn up and down a coal-fired plant very easily. The only plants you can do that with are peaker plants that are primarily natural gas. And then solar and wind are what you buffer with at the end. And until there's enough battery storage in the US at utility scale to act as a buffer, Bitcoin miners are the ideal buffer.
And in terms of this mining legislation in Texas, I've spoken to a lot of people who felt blindsided by the proposed set of rule changes here. And when you think about it, when there was this mass migration of miners out of China, a lot of people headed to Texas, spent a lot of money building up infrastructure there. So what's the temperature in the industry right now? How are people feeling about these proposed rules and what the ramifications might be if it is passed?
Sure. So I think, there are two core aspects to 1751, which is the state bill. One has to do with ancillary services revenues and capping miners' participation in that to 10%. And the other has to do with tax abatements for data centers and eliminating Bitcoin miners' ability to benefit from that. So this is another instance where a very narrow industry is being targeted, even though it doesn't act differently than other industries. Bitcoin mining and data centers are essentially one and the same thing. A bunch of computers using energy, processing data. That's what Bitcoin miners do. We're not digging in the ground. We're not causing all this pollution. We do the exact same thing an AWS data center does, only at lower cost and more efficiently. So why target specifically Bitcoin miners? Well, in the case of ancillary services, this is essentially where a company signs up with ERCOT to allow ERCOT to control their load, and they get paid when they shed their load, meaning they give up their energy that they would otherwise have been consuming to the grid. So who else participates in this service? Because ERCOT only needs a certain amount of ancillary services contributors. And Bitcoin miners have this fabulous ability to, in 10 minutes, shut down their load. And when the grid doesn't need the energy, they can come right back up. Other companies like food processors, steel mills, et cetera, can't do that, because if you do it in a steel mill, your steel is going to sit and solidify. So you can't do it. If you look at the companies that used to participate or used to dominate the ancillary services revenues, when Bitcoin miners came on the market in Texas, they all of a sudden started competing with these legacy companies for these ancillary services, because from ERCOT's perspective, Bitcoin miners are more efficient at shedding load. And so this is simply a way for people who were benefiting from ancillary services before to limit artificially Bitcoin miners from participating. So you're, again, targeting an industry because another industry feels they're losing out on something.
Well, it seems like no matter where Bitcoin miners are going, they become the target of new legislation. You have China banning the industry, and a lot of miners shifted to Kazakhstan, and then you saw new rules and regulations around the mining industry there. And there's been this ripple effect in the United States, where now the epicenter, now that a lot of the network is centralized here in terms of mining, and you have to wonder, the legislators got wise to the fact that this business makes a lot of money, and it's either you cut down on it or you get a cut of it through taxation. So, I mean, is this just an inevitable outcome no matter where the industry migrates? And do you think that the U.S. remains where a lot of this hash rate is centralized, or do you see that shifting as more and more regulation like this crops up?
So recent reports say that Russia is the number 2 largest nation from a perspective of Bitcoin mining. That's scary. When China had over 51%, had the government in China taken control of the Bitcoin miners, they could have done things to damage the security of the Bitcoin mining network. I don't think the U.S. is particularly interested in having nations that it doesn't happen to agree with get too large of a share of the Bitcoin mining network, because at the end of the day, what the U.S. should want to do is make Bitcoin and digital asset technologies open and available to everybody. And they should put forth regulation and laws that allow them to do that. Otherwise, Bitcoin mining and digital asset companies will leave the U.S. The U.S. was very successful with the internet in being a dominant and leading player in the development of the internet. I think the U.S. is about to lose that with digital assets. Countries like the UK, the EU, Singapore have put forth great legislation around digital assets. In Germany today, you can go and create a digital fractional ownership of a piece of real estate, of anything. They have securities laws that allow you to do that. Germany being one of the most conservative European countries, by the way. The EU has the MiCA legislation. The UK is open for digital asset companies. The US is closing the door. Why? You could take one extreme and say this is a repeat of 1933, when the US government decided that people were putting their money in gold instead of savings bonds and government bonds, and so they prohibited US citizens from owning and holding gold. Is this the beginning of capital controls? The US dollar was weaponized in this Ukraine conflict. Is it now being subjugated by China, Russia, Saudi Arabia, other nations moving off the dollar standard? Is this the first step of government capital controls? Who knows? I hope it's not. I hope that this is just simply members of Capitol Hill and legislators who are lashing back at some of the excesses that companies like FTX, Celsius, Three Arrows Capital, Voyager, et cetera, had, and how consumers were harmed. And they're just doing a pendulum swing, kind of whack-a-mole attack that, hopefully will come back more to something more moderate and more measured in the future. But, it's hard because not a lot of people in government really understand digital assets.
Okay, that's all for Crypto World today, but we'll be back again tomorrow. We'll see you then.